Welcome to Game Trader Live. This is the show where we talk about investing in stocks and look at stock charts. I'm your host. I'm not Luigi. My disguise is pretty great. You may think I'm Luigi, but I'm actually not Luigi. So don't adjust your television set or your smartphone. I am not Luigi. I just have an excellent disguise. So yeah, we had a bunch of companies report today. Let's get into some of the charts, see what's going on. It's the end of the month. We like to look at monthly charts. Last episode, I looked at quarterly charts because September 30th was the end of the quarter. October 31st is the end of the first month of the fourth quarter. So we don't have any... We can look at the quarterly chart for existing signals, but there's nothing cooking yet that I want to draw attention to. But yeah, let's get to the charts. Apple reported today... company beat on the top and the bottom line barely. It wasn't like a huge beat by any stretch of the imagination, but it was decent. I think they came out with revenue of 94.9 billion versus expectations of 94.6. It's a slight beat on revenue. And they reported EPS, earnings per share, of $1.64 when you back out the one-time tax charge that they took. So that beat the Whisper number, which was 163, as well as the EPS expectation, which was for 160. So they beat. They spent... I have to look it up. They spent a lot of money on buybacks during the quarter. Let me see what I got here. Apple Investor Relations. I'm just getting their quarterly report up here. Yeah, $29 billion was distributed to shareholders in a form of dividends and share buybacks. So they spent a lot of money in the quarter doing that. Stock is down. This is the reaction of the stock on earnings. I guess even though the sum of the parts at Apple beat expectations, several revenue segments missed analyst expectations. I believe, iPad revenue was a little light. iPhone revenue beat expectations. It came in at 46.22 billion. Expectations were for 45.47, so they beat the iPhone expectations. Mac revenue was light, 7.74 billion versus 7.82 billion expected. iPad revenue was also light, 6.95 billion versus expectations of 7.09 billion. 7.09 billion. Sorry. Other products revenue also missed. It was 9.04 billion versus 9.21 billion estimate. And even services revenue came in a little light, 24.97 billion versus expectations of 25.25 billion. Important to note that services is still the second largest business at Apple when, iPhone is still in charge. It's basically 50% of revenue comes from iPhone. But their services business is bigger than the Mac, iPad, and other products segments combined. So that means like Apple TV Plus, Apple Care, Apple One. There's a lot of different things that are included in the services revenue. So yeah, kind of a mixed bag for Apple results, if we're being honest. We can take a look at some of the longer term charts now. So if things stay where they are, you're going to have a just 2 down sort of week. With only a day left in the week, I wouldn't really be looking too much at that. If we want to look at the monthly chart, if it closes the week below 231 or 213 and 92 cents, you would have a monthly outside bar to pay attention to. Right now, it's only gone outside to the upside, so we'll see what happens here. Kind of in a mess, though, if we're being honest. Not inside quarter, because it did hit a higher high by 26 cents. So you see the quarter that ended September 30th, 2024, that was 237.23. The high of this most recent quarter, which is just October so far, has been 237.49 cents. So that's going to be a level to watch if Apple really does want to get going here. You had an outside bar last year to the upside, so there still is a buy signal on the yearly chart, but we're running out of year. There's only 2 months left, if you can believe it. So yeah, we got I realize my hair's looking kind of Wario-like right now. I need a haircut. Don't adjust your television set. This is just I'm not Luigi. If you thought I was Luigi, I apologize. I don't mean to mislead you. So yeah, Apple's interesting because obviously on shorter terms, it's not looking very good on the chart, so you don't have time frame continuity. And it's also just huge. It's the largest company on earth right now because Nvidia had a bad day or whatever. But it seems like every other week it's either Apple, Microsoft, or Nvidia. That's the largest company on earth. Right now it's Apple. We'll see where it ends the week though, right? So another company that reported today, Intel, actually surprised people. You're going to have a big ass outside bar here. We'll see what tomorrow looks like for them. But it's likely going to be an outside week. It looks like we might be getting out of this range. They actually projected earnings for the next quarter that were above analyst estimates. This quarter they took a huge write down because they're going to spin off their foundry business, and that required them to take a bunch of restructuring charges. So yeah, if you were trying to bottom pick Intel here, you're up a little bit. I think around the $19 area, it seemed to have bottomed out. And as of this afternoon, it was at 24. So you might have caught a nice gain there. But just to remind people, this is what the last year or two has been for Intel. And also, it's important to note that Intel never got to its .com bubble high. When it was one of the largest companies on earth back in the year 2000, and it never reached those heights again. And now it's really fallen. So we'll see what happens. Fundamentally, you have to look at their report and be like, well, that's good news that they're going to be profitable. But now it becomes a whole, okay, so they took this right down. They had this kitchen sink kind of quarter this quarter. Once they're lapping this next year, if they're unable to really show profit or anything, I think the stock could probably still go lower. They've just missed out on a lot of things, be it AI chips or mobile chips. They divested ARM at the wrong time, at a time where everyone's using ARM holdings. So yeah, I still don't really have much faith in the management at Intel, but it does seem like they're trying to survive. And when a stock is down in the dumps like this, it is worth taking a look at. I understand why people, when we have this world of high flyers in, AMD had a rough week, but you're talking about a stock that's doing quite well in the last 7 years, and you compare it to something like Intel, and you're like, oh, AMD ate Intel's lunch here. And, NVIDIA also ate Intel's lunch in that same time period. So yeah, Intel out with numbers. So it was an earnings miss because they lost more than expected, but there was extraordinary items, the restructuring costs and the impairment charges. But I think it's the guidance for next quarter that got people buying the stock in after hours. We'll see how that plays out tomorrow. But yeah, that was Intel's report. And then yeah, Amazon out with numbers. The stock's up quite a bit in after hours. You had this nice big green bar on 8 million shares. It shot up about 3% on the number. They beat on the top line, beat on the bottom line. AWS is massive. They made something like $27 billion in revenue in the quarter from AWS. So yeah, they're kind of in all the right places. They didn't show the weakness that we saw in other consumer stocks. It seems like fast food companies are really kind of under pressure right now. McDonald's reported a miss. Oh, I don't have McDonald's on my watch list. What's wrong with me? I must not be loving it. I'm gonna add it though, so we can just easily click on it. Yeah, if you look at like the long-term chart of McDonald's, you're talking about one of the greatest buying opportunities ever. In 2009 or even back in 2003, could have bought the stock for $13. It's currently at $291. But the last few weeks have been pretty brutal. You had an outside week to the downsides, trying to stay back within that range, but it's already broken down below it this week. On the monthly chart, you have a 2 that could be reversing back down here. That's an all-time high that it reversed off of during the month of October. So that's something to watch. Interesting. You had an outside quarter followed by what could be a 2 reversal down. So you're going to want to watch the low. You want to watch the low of the month on McDonald's. This isn't really our coverage space, but there's a lot of companies reporting this week. So yeah, a break below 289.84 would be a reason to continue to sell it in November. But yeah, we saw weakness. Yeah, why I brought this up? We saw weakness in McDonald's. We saw weakness at Chipotle with their earnings report. I think we've seen weakness in Nike, right? We've seen weakness in Starbucks. Actually, Starbucks is hanging in there better than most of these stocks because it's already been punished quite a bit. But they're trying to turn around Starbucks. I guess my point is that Amazon seems to be insulated from most of these consumer issues. So it's likely going to be an outside day for Amazon tomorrow. So you want to take a look at like just a breakout. This thing's going to get close to its all-time high. So you're going to want to watch 201.20. If it gets above that, I think it could really get going. Because it hasn't been there. It hit that all-time high in the summer. And then it kind of sold off. It sold off pretty hard on earnings and also when the Japanese market crashed in August. But it's kind of climbed back all the way. So we'll see. The results were solid. And like I mentioned it, AWS is growing rapidly, something like 19% year over year in revenue growth, and it was like a 27 billion top line number or something. So they're doing very well over there at Amazon, and obviously Amazon Web Services. So yeah, those were the big 3 companies to report today. So I wanted to give them all a look. This show is, it's more about just looking at charts and where we think the stocks are going to go. So I'm going to look at Tesla here. Tesla on the monthly chart tried to break out. It is kind of still in the mud. Let's see. On the quarterly chart, it did get above the high, but it's back within that range. This is a stock that's going to move on the election. It's inside year, so maybe we should just sit here and wait and come back next year to try to trade this to the upside or the downside. But not speaking about the chart here, but more just fundamentally, I think Elon Musk is a risk. He's no longer an asset to shareholders of Tesla. I think he's a risk, and I think that his bets on Donald Trump may lead to problems for Tesla shareholders down the road. So I would not be a hero in this stock. We saw Cathie Wood actually sold shares. She's one of the larger shareholders of Tesla, one of the largest fund managers that owns Tesla. They dumped some of their stake on this earnings pop because the stock did jump from 212 to like 262 on earnings, and now it's kind of digesting that move. We'll see what happens. But I do think this is a stock that's going to move on the election. So it's something to pay attention to. Hey there, it's Luigi. Nice to meet you. Actually, it's not Luigi. I'm Asif, but I'm glad my costume was so good that it tricked you into thinking I was Luigi. Let's see, what other stocks do I want to take a look at? Oh yeah, Meta reported earnings this week. Disappointed Wall Street. They're just saying that they're going to keep spending on AI. This is the long-term meta chart. I'm not sure if I would buy it up here. But I do think they're doing some interesting things. I think Llama 3 being open source is an interesting way to attack AI. They actually have a Meta AI product that they're using in their different platforms. They have those Ray-Ban glasses that are doing well, but they also have the Reality Labs division that lost $4.4 billion during the quarter. And now it just seems like AI is going to be another one of those things where they're not even making or losing money yet. They're just spending a bunch of money. So the capital expenditures for next year are going to be higher. That was a trend I heard on multiple conference calls. One being Microsoft yesterday, Amazon today, Facebook yesterday. They're all saying they're going to increase their investment in AI spend. So you see capital expenditures increase, which means less cash flow for these companies and more cash flow for one company in particular. That's NVIDIA. NVIDIA on the month, you had an inside month and up buy signal. Today was the last day of that buy signal, so say goodbye. You do have a inside quarter to watch. So when it did get above last quarter's high of 136.15, you saw the stock move higher. So that's still something to watch. If we get above 136.15 by the end of this year, there's another leg or so that can go in this story that is NVIDIA. Tesla mentioned that they're not compute constrained, but they did deploy something like 100,000 of the NVIDIA H100 chips. So basically everyone working in AI is working with NVIDIA or AMD, and it seems like NVIDIA is the supplier of choice, and they're also best in class. So yeah, it's just interesting to see. Meta said we're going to be spending on AI. Microsoft said we're going to be spending on AI. Microsoft's still cooking up an inside quarter, but you look at this week, you got an outside week to the downside. So whatever the low of the week is going into next week will be your line in the sand for if you want to short this thing or not. Their CFO said that their CFO talks down the AI hype every time she speaks. But she said that they expect to lose about $1.5 billion from impairment charges on their OpenAI investment. If things stay where they are tomorrow, you're going to have an inside month to pay attention to. So you have an inside month and down or up signal that you could see. And there's obviously an outside quarter and down that you could watch. So below 385.58, you would have an active sell signal for the rest of the year in Microsoft. These are just going to be important levels to watch because we know we have a volatile event coming up. We have the election coming up. So to the upside, above 438.50, you would be a buyer of Microsoft, and below the low of the month, which is currently 406.30, but that could change tomorrow, right? So whatever the low is, if it stays inside, you would have a potential actionable signal. Because obviously, there's only 3 potential outcomes, right? Or I guess technically 4. Next month, it goes above this previous high. Next month, it goes below the previous high. Next month, it stays inside of the range. Or it goes above and below, creating an outside bar. So those are the 4 potential outcomes here. I'm just giving you guidelines for what to do if price moves in a specific manner. So yeah, Microsoft's going to be one to watch. Netflix is already out with their numbers, and they beat, and people seem pretty bowled up on them. This is a stock that hit an all-time high. I brought it up a few episodes ago when we had this outside month. It was like a delayed breakout, but it did break out on earnings. They had solid numbers. They seem to be doing better than many of their streaming cohorts. What else we got going on? Anyone in the chat have any stocks they want me to look at? Let me know. We haven't had earnings out of Nintendo yet, but they did ship a clock during the quarter, so let's see how that affected things. Didn't. Okay. I mean, it's a potential rev strat. If you... When did it get that low? Did that really happen? It got all the way down here? That was in August. But what happened that week? That must be a bad tick. That seems like it's just erroneous. But either way, it did dip, like we did dip below 13. Did we dip below 1310 this quarter? Or this month? Yeah, we did. Okay. So we do have a potential rev strat. The wick of this is off, but we do have an inside month, a breakdown below that, and then to close back in it. So a break above 1379 would be a buy on the monthly chart for Nintendo. They report earnings on election day. Would Netflix... So, you know what, Bill? That's a great question. Rumpo Plays in the chat asks, would Netflix... is it worth watching for a buy? Yes. I think they're best in breed when it comes to that space. The other thing going on is this is the year in January, they're going to start working with TKO on Monday Night Raw. And I think premium live events are going to start airing on Netflix as well. So I think Netflix ahead of the WWE deal is probably a buy. But maybe TKO itself is also a buy on the back of that. Because WWE is doing very well right now. And I can only imagine they're going to make more money when they move from Peacock to Netflix, just when it comes to the amount of people who are on the platform already, the way that Netflix pays out things, and also just how smart TKO is run. They do a very good job. I may not like UFC or whatever, but I can look at the business and be intrigued by it. So yeah, you have a obviously TKO's had a monster year. It's hard to want to buy it up here, but these are two stocks that I definitely paid close attention to. So Netflix, yes, I think Netflix is worth paying attention to. Let's see. Anything else? GameStop. God, these people, man. They won't stop talking about this stock. So this is the month of October in GameStop, the entire month. You have an inside month. Everyone's like, MOAS, MOAS, MOAS. And nothing has happened yet because you were trading inside. So if you want to be dangerous and you want to buy call options or put options in GameStop, or if you want to buy it or short it, the range to watch for November would be a breakout above 24.59, which was October's high, and a break below 20.30, $20.30, which would be a sell signal. So that would be your range to pay attention to on the monthly chart. Still trading inside quarter, because this was that massive range where Ryan Cohen screwed us all over, and then it traded inside of that quarter and once again inside of it. So you're going to want to watch for a break down below 1873 or above 29.79. And we're right smack dab in the middle of it. So this is the kind of chart, like if you see an inside on any time period, but like especially something like a quarter, this means a lot of people are getting chopped up trying to trade the thing. Because on a shorter time frame, oh wow, look, GameStop had a huge week, right? But then you zoom out and you're like, oh, it didn't even get out of this range. Like it's still stuck inside of this range that dates all the way back to May. So everyone's like, oh, MOAS. And I'm like, yeah, I don't think so. That's what the mother of all short squeezes looked like. And then it's been lower high, and lower high ever since then. So the bears will say you're still talking a series of lower highs. The bulls will say that things bottomed at around $10, and there's an uptrend in place. But I think it just might be dead money. You just might be sitting there holding on to GameStop, and it's going to trade between 20 and 24 for the next few months. But that monthly chart, I think, will guide you better than most of these other things. But like I said, you have monthly and quarterly charts that you can look at for this one. And then the yearly chart on GameStop, it's an outside year. So next year is going to be interesting because you have an instant broadening formation, right? That's the upside, and then this would be the downside. So I think the level to watch to the downside, like if things really do break down at GameStop, 721 would be a technical target. Why I don't think that's likely is they have almost $10 per share of cash. So it seems that if it ever got down there, I might even buy it. Although I am not a fan of their management. Have I looked at CD Projekt Red? Not recently, but since you're here, let's take a look. This is the yearly chart. It's actually a reversal strategy being cooked, but for a moment in time, it broke above 1046 on the chart, and that was a buy signal on the long term. It's cooking. It's inside quarter, so it hit the high of the year last quarter at 1201, and now it's kind of churning around there. The month, you had an inside month and down sell signal right now, but the month's over, and there wasn't a whole lot of damage done. The sell signal was active below 1028. Stock closed the month at 995. So you want to watch for a break down below 969 if you want continuation of this inside month and down signal. And like I said, it's trading inside quarter. The weekly chart's trading inside week. So if you want to be bold and trade the weekly chart, you could. But we try to look for time frame continuity. So if it's trading inside week and it's trading inside quarter, you're probably going to get chopped up trying to trade it. But like you have a defined uptrend that started a few years ago. Obviously, that would be lower, right? Like this uptrend would go into effect somewhere around 835 a share, which is like, a good 10%, 15% lower than where the stock's currently trading. But yeah, it does look like that $4 a share. Yeah, down here in September of 2022, it did prove to be a great buying opportunity. You could have tripled your money in about 2 years. And yeah, it was on the back of really poor Cyberpunk sales. They've turned Cyberpunk 2077 around, and now they're working on The Witcher 4. They're doing stuff licensing their games to Netflix and whatnot. So yeah, I think they're interesting here. I wouldn't buy them here, but yeah, like I said, 835 would be an interesting place if this uptrend does kind of hold. It is a longer term uptrend. There's another one down here at like 750. So I think there's like, you buy it when people hate it kind of thing. Or if there's a global panic, there might be an opportunity to buy the share if equities are just going down. I think it's an interesting stock because The Witcher 4 is coming, right? Like that's coming out. So you're going to have to, if you want to own it ahead of The Witcher 4, you're going to have to buy it. And then what, like the next year or two? I don't think they've said when The Witcher 4 is coming out or anything, but yeah. So does that answer your questions about CD Projekt? I just realized I don't have them on my watch list either. Cool. Let's see, what else should we talk about? Nintendo. Yeah, Nintendo reports next week, so we have an inside week. If it breaks down below 1314, there'll be more selling. If it breaks out above 1340, there'll probably be some buying. Let's look at the longer term charts. Like I said, RevStrat month, so a breakout above 1379 would be a buy on the monthly chart. It is trading inside quarter, so that's interesting. You had outside quarter, inside quarter. So a breakout would be above 1427. Seems like a tall order. This is one of those stocks where I could see it do nothing for the rest of the year because we're not getting the Switch 2 reveal until next year. So this might be dead money for the next few months. But I don't know. Maybe Alarmo and the music app will drive interest in the stock. They really seem to be pulling out all the stops to beat the revenue number for the Christmas quarter. So just pay attention to Nintendo, always. Long term, they're doing pretty good, though. Take-Two, good question. I covered my Take-Two short. I lost like 20% or 30% on it. I was wrong. I shorted in like the 90s because I thought the Zynga acquisition was going to be a problem. It did drop originally, and then I didn't cover, and then I held it, and I was just like, I'm done. I'm covering it. So I got out in like the 150 area, and then it's up about $11. So Take-Two heading into GTA, you're going to want to look at longer term charts here. Quarterly chart doesn't really give us much guidance here at all. Let's see the yearly chart. You have an inside year potential rev strat. So yeah, where are we going to close the year? Right now, it went above it and closed back inside. So that would be a sell signal if it maintains where it's currently at. Only if it breaks down below the low of the year. So if next year it breaks down below this year's low, that would be a sell signal. What would cause that would be a delay of Grand Theft Auto 6. If that game isn't coming out next year, this could portend pain. If it does come out this year, yeah, I think a revisiting of the all-time highs is in store, so $214 a share. If that's a compelling return on your investment, then yeah, you could take a look at it. But I think there's probably better upside in other video game stocks. CD Projekt Red being one of them. Because the problem with GTA is when that game does release, it tends to be a sell on the news event, even if it's great numbers. Because they build so much hype into this stock. You know, like, when did the first trailer for GTA when was the first trailer for GTA 6? It was December 5th, 2023. So let's go look at that on the chart. Yeah. Stock was at $100 when they showed off that trailer. It's currently at $161.72. So it's up 60% since they dropped the first trailer. They've shown us multiple trailers, Bill. The first one aired at the end of last year. Because remember, it got leaked, and then they said, screw it, we're just going to drop it. And they dropped it. That was December last year. But they did show us another one. So, I don't know. I don't have much conviction here when it comes to Take-Two. Obviously, I was short it just because I think fundamentally, ignoring the GTA outlier that's coming, I think that some of their other stuff is not doing as hot. And also it's priced for, I wouldn't say perfection, but close, damn near close. It trades at 65 times forward earnings. That's 6.5 times its growth rate. It trades at 5 times sales. It trades at 4.7 times book value. But granted, book value is not really a measure of a tech company usually because they have a lot of intellectual property. So I've always been of the opinion I'd rather buy this stock at like 60 a share, but maybe it's just not going to go down there. So I might just miss out on this next GTA move. But I'm not falling over myself to buy it. I just want to point out Reddit. This is insane. I don't know what to think of this chart. I don't. I guess this is what happens when Google just puts your webpage in the first placement for every search result. But yeah, we're talking about a company here that is being valued at $20 billion, and they have 97 million daily active users. That's a forward PE ratio of 588 that's 588 forward PE, 18 times sales and 10 times book value. I'm going to be honest with you folks at home. It's taking every last ounce of my energy to not short Reddit. It's such a short. Look at this thing. I didn't like it here. I didn't like it at 45. I didn't like it at 70. I didn't like it at 76. I sure as hell don't like it at 123 and 60 cents. But I haven't been short it yet. That's just, they went up a lot. They reported a better than expected earnings. Provide some solid guidance. Yeah. Best performing internet company of the week goes to Reddit, which is up 46% in a week. That is a lot. That's a lot. And yeah, no real technical reason to sell it either. So your guiding force here is going to be this week's high. So what you're going to want to watch, we'll see what happens tomorrow, right? If it trades inside day, maybe you'll have something to look at there. But I thought it was expensive at 45 a share. I think it's absurdly priced at 120 a share. And if it goes to 200, I'll still think it's expensive. But clearly the market doesn't agree with me. So I'm not going to fight it until I have a technical reason. This is why I use both fundamental and technical analysis, because I'm like, my gut tells me to sell this immediately, but technicals don't tell me. They tell me there's no reason to sell it yet. The buyers are in control, as my mentor used to say. But yeah, Reddit, definitely an outlier on the week. Also, Snapchat, still not bankrupt. Look at that. They actually announced a $500 million buyback. Stock went up, it was like 15% on earnings. Trade inside day. It looks on the weekly, on the monthly, quarterly. Inside quarter still. Easy, nice. Inside month and up buy signal. Was only active for 2 days of the month, but what are you going to do? Congratulations to Snapchat on still existing, though. I think it's pretty impressive. Let's see. Anything else we got to go over? Kind of want to take a look at I'm trying to, oh yeah, EA reported. EA was out with earnings this week, and they were received well. They had record revenue at the for a football video game. EA Sports College Football 25 set records. Still trading inside month, but it's recouped a lot of its losses. So you had an inside month and down. It tried to get back inside, did not. And now it's traded inside month. So next month, starting tomorrow, it would be a buy above 151.59 and a sell below last month's low of 140 and 40 cents. So that will be your guidelines. Obviously, it could break out above it, could break down below it, could do both, or could stay inside. Boo, Andrew Wilson, indeed. Another company that reports next week that we should probably mention before I get out of here. ARM. I don't think there's much of a buy signal here. Yeah, it's trading inside quarter. It's only been trading for 2 years, so you don't really have much to look at there. Just want to put it on people's radar. ARM reports, I want to say November 7th. I don't think I mentioned Google yet. Google's still trading inside quarter. For a brief moment, we had a buy signal. Actually, we still do. Google is a RevStrat week. This is a perfect example of what a RevStrat week looks like. You have a bar. The next bar trades inside of it. The next bar broke down below, right? Because the low of the week was 162 and 76 cents. This low was 161.01, but then it closed back inside. So 163 was where it, 165.27 is where it closed the week of Friday, October 25th. So we're above that. So you have an active buy signal, but it's only for another day. And they already sold off the stock pretty hard from its recent high, which was 182. their numbers were good. So I think this is going to be an interesting one to watch through the end of the year, because you have an outside quarter. So if it gets above 191.75, I think it can really get going. That being said, that's the all-time high of the stock. And that's we've kind of been talking about that in a few stocks, right? I think I mentioned it with Amazon. Amazon's within sniffing distance of its all-time high. Apple was within sniffing distance of its all-time high. It's not after earnings, but it was. Microsoft was dancing with its all-time high before they sold off. But they're down almost $60, 15% from their all-time high. Meta, kind of same thing, hit its all-time high just earlier in the month, $602.95. I guess what I'm getting at is we're kind of in nosebleed territory for some of these tech companies, and they have to execute. If they don't execute, they're going to get sold off. I want to take a look at volatility. So we had a buy signal on volatility today. Inside day. Yesterday was an inside day. Broke out above that. I want to say it was some economic data had some people spooked. Microsoft and both Microsoft and Facebook were down on the day, and they're two of the largest components of the S&P 500. So we saw the VIX shoot up 13% today. You also have the election coming up next week. So you have inside week and up, inside day and up buy signal on the VIX. So continuation of this would be above this week's high. So as of right now, that's 23.42. It's unfortunate I'm not doing this on a Friday because things could change between now and the end of the week. But none of my monthly signals will change because today is the end of the month. That's why we do the show on this day. So we do have an inside month in the VIX. Actually, inside month in the VIX. So a breakout above 23.42 would be a buy signal for the entire month of November, and a breakdown below 16.61 would be a sell signal. That's on the volatility index. That has an inverse relationship to the S&P 500. So the S&P 500, let's see what it's cooking. Hit an all-time high this month. What was it, 2 weeks ago? This is the all-time high of the S&P 500. So once again, nosebleed territories. Ahead of an election, we're going to have to watch out. But no actionable signal right now. You do have an inside year and up that is running out of time. Obviously, we only have 2 months left, but you do have this. So something to think about if by some miracle the election goes smoothly. I'm not so sure that'll happen. I'm not going to be placing bets on it happening. But, we do have an inside week and up buy signal that's still valid for one more day. And you have an inside month to pay attention to. And I already gave you those numbers. So above 23.42, below 16.61. And as I said, the volatility index is inversely correlated to the S&P 500. It's not 1-to-1, but it is how options are priced on the S&P 500 based on the volatility index. But both the S&P and the VIX can be manipulated in ways that sometimes create not 1-to-1 tracking. Let's see. Qualcomm's been in some crap lately. They cooked up a potential rev strat to the downside. So here's the first month. This is August range. September, you traded inside of the August range. And then October, they broke out above it only to go back inside of it. So you are looking for a breakdown below 162.08. And that would be a sell signal on the monthly chart of Qualcomm. Reason I bring it up is ARM Holdings is threatening to pull the license to their chip designs for Qualcomm, and that would be a huge negative for their business going forward. So something to keep an eye on. Semiconductors as a whole, nothing of note on the monthly chart. Inside quarter but that could go throughout the rest of the year. Weekly chart looks kind of ugly. Inside week followed by an outside week and down. So there could be selling tomorrow into the end of the week. We'll see. But this is just a weekly signal. But next week, if it breaks down below the low of this week, you could get some continuation. Let's see. Taiwan Semi had some solid numbers. Traded inside week and down on their results. Oddly enough, hit an all-time high earlier in the month. They're still doing well. They're best of breed in their business. Nothing really to say on the quarterly chart either. You do have an inside year and up buy signal, but you only have 2 months left in that buy signal, so we'll see. But above 110 and 69, it is a buy. That was last year's high. This year's high is 212.60. So if people are harvesting gains, you may see some pressure in TSM into the end of the year. If Donald Trump wins, I think you could probably see some volatility in TSM. But I would just watch it. I think it's an interesting stock. It's one of the most important parts of the semiconductor industry in 2024. Texas Instruments was out with numbers, I want to say earlier this week or last week. It's kind of in the mud. Potential rev strat to the upside on the monthly chart. So if it gets above this month's high of 211.59, you would have a buy signal in November. Obviously, your stop would be the low of this month, October, 192.85. So kind of trading in between that range, but you might be able to get a nice little monthly breakout in Texas Instruments. They did report solid results, so you got some fundamental news backing up the stock movement. Let's see, am I missing anything? Is there anything glaring that I should be talking about? I think Sony reports next week, right? Oof, that's not a good looking chart. Sony's inside quarter. We'll see what happens there. Potential. Oh no, close to an outside year. Potential rev strat year. See, a break above $20.19 would be a buy on the chart. Obviously, that's like $3 away from where it's currently trading, so I don't think it's going to happen. But something to watch for next year, perhaps, is that there's a potential buy signal for all of 2025 for Sony. But we need the year to play out before we make such calls. I kind of want to know, when is the last trading day of the year? And am I supposed to be doing an episode for that? Let's see. December 31st is a Tuesday. Should I stream on December 31st? Yes. Do I want to? I don't know. We'll find out. Stay tuned. I will say that November 30th, I will be streaming, right? Is that hopefully? No. November 29th. That'll be the next episode of Game Trader Live. Will be November 29th. And I'm sure by then the election will be settled. So hopefully we don't have to worry about more volatility. See, any other? I just keep talking about Denny's. I just worry about this company. They're announcing they're closing more stores. Things are pretty bad over there. Potential rev strat though. Inside month followed by a down. It traded back within that range. So a breakout above 685 would be a buy signal in Denny's. The yen. How's the yen looking? Inside quarter for the yen still. I don't think I have much else to show you today. It's been a long day. We're covering all sorts of stuff here at Shacknews. Is there anything else? Anything? Unity has earnings coming up. Cooking an inside week. We'll see if it stays inside week. Inside week ahead of earnings is interesting, though. I want to say they report next week. Let me make sure. Yep. They report on November 7th. So, unfortunately, I'm not sure if it'll stay inside week tomorrow, but right now you have an inside week, so your buy signal would be above 2132, and your sell signal would be below the low of the week, which is 1984. If it stays within last week's range, you will have a potential buy or sell signal based on those ranges. It would be an equilibrium break, or it might just stay inside. We'll see. It tends to be pretty volatile around earnings, though. Unity is not. They made some bad decisions, and yeah. Before I go, would you like to hear a hot take? I have a very hot take. Do you want to hear my hot take? I need validation. I need someone to tell me in the chat that they want to hear this. Otherwise, I'm not going to say it. Okay. Bill wants to know. Bill, you've probably heard this hot take because I probably said it to you earlier in the week. Earlier this year, I came up with a price target for NVIDIA when it was kind of in the 500, 600 area. You have to remember there was a 10-for-1 split here. So split adjusted, I'm talking like $50 to $70, January, February, or this year. And I came up with a price target of $1,500 a share, or split adjusted $150. So what's happened is that NVIDIA's hit like 145 earlier this week. And that's really close to my target. So I got wondering, should I sell? Or is something else going on here? You see in the headlines, NVIDIA, largest company on earth, overtook Apple earlier this week or last week. It's been back and forth between those two companies for the past month. And Microsoft was in there for a little bit too. I think NVIDIA will be the largest company on earth. And I think, based on what I'm hearing, when I say I'm hearing, I mean on earnings calls from CFOs, is that AI spending is not going down next year. It's going up. And demand is going up. And the price at NVIDIA that they're selling their H100 and H200 at is going up. They have almost inelastic demand for their product. So it's what if the singularity proves to be a self-fulfilling prophecy for Wall Street? Where the promise of AGI and the promise of the singularity is going to create this feedback loop where company spends money on AI, stock goes up. Company spends more money on AI, stock goes up, right? Until that, which we may be seeing the cracks in the edifice now, because I pointed out Microsoft sold off on earnings because they're 2 quarters in a row. They've said, hey, we're not actually making any money on AI and we're spending a lot of money. So I asked myself, what does this mean about NVIDIA? It means that all of their customers are spending like drunken sailors. And I just don't think it's ended yet. So I guess here's the hot take. I think NVIDIA will be the first, let's go full screen for it. I think NVIDIA will be the first $10 trillion company. And it's going to take time, right? So I'm not saying it's going to happen next week. I'm saying in the next 5 years, I think NVIDIA could go to $450 to $500 a share. But it's based on the premise that AI capital expenditures will increase for the next few years. But I don't see how NVIDIA doesn't benefit from this. They do. They're making all the money. So until there's a competitor that appears, and I know AMD is kind of a competitor. AMD It seems like both AMD and Nvidia have too much demand for their products. So I don't see any reason to sell it. So it was interesting because we got to my fundamental target of 145, and I'm like, we got pretty close. We got $5 within my fundamental target. Because I was like, this is a good price to earnings to growth multiple right around here. But if this spending is just getting started, I don't think it makes sense to get off the bus here. I think it could be multiple years. So yeah, my wildly bullish target, and I don't think you'll hear anyone on Wall Street with this target, but like in the next 5 years, I think there's a chance that Nvidia could go to $450 a share. And in that scenario, we're going full bubble. Like, it's not just this, little bubble, right? Like, this has been an orderly move higher off the low of the pandemic, right? Move up, bear market, move up, bear market, move up, maybe another bear market. But we have an established uptrend here, right, in the S&P 500 off of the pandemic. You could argue that this is the birth of a new bull market that began in the year 2020. Or you could argue that this is still a continuation of the bull market from 2009, right? Either way, we haven't gone fully parabolic. Like, you look at the NASDAQ of the .com bubble. Now this is the new NASDAQ bubble here. And this is not technical analysis. This is just a gut feeling. I just have a feeling that Nvidia will be the largest company on earth. But it's not just going to be the largest company on earth. It's going to be a $10 trillion company. Because we have multiple $1 trillion companies now. It's not even like a big deal. It used to be like Apple, multi-trillion. Amazon, multi-trillion. Google, multi-trillion. Microsoft's multi-trillion. Meta is multi-trillion. And Nvidia is multi-trillion. So I don't think it's like, we hit $1 trillion. That's all. Like, I don't think that's what we're seeing here. I think if this market continues to go higher, I think Nvidia will be the poster child of the bull market. That's basically my take. But yeah, it all depends on fundamentals. The day that they say, hey, we're seeing a decrease in demand, or we have too much inventory, if they say those phrases on an Nvidia call, I will be the first one to sell the shares. But I see no evidence of that. I see no evidence of the spending slowing from all their customers. Meta, Microsoft, Amazon, Apple, even to a lesser extent, Tesla. They're all paying Nvidia for chips. So until that stops, I don't think there's any reason to get like super bearish. But it's undeniable. You look at that chart and we're without a doubt, we're in nosebleed territory. But this might be 1997, not the year 2000. That's my point. Like, we might be just getting started for this bull market in AI. And I'm not saying everyone's a winner. In fact, I'm saying there might only be one or two. So that's going to do it for, I think that'll do it for the show. I don't know. What do you guys have anything else? No? Yes? Maybe? I don't think it's a race to see who can make AI more better. I think it's more better. I think it's a race to artificial general intelligence. The promise of generative AI that can learn, artificial intelligence that can learn, a learning computer, not one that's just pattern recognition. The promise of artificial general intelligence and the singularity are these driving forces. So it's like, it's kind of like the space race, Greg. It's like when Russia and the United States were both investing heavily in space travel. It's like that, but with AI. And you're seeing it at Microsoft. You're seeing it at Meta. You're seeing it at Google. I just don't... it's not going to stop until it becomes abundantly clear that they're not going to be able to do it. Everyone in the space seems to believe that we're going to get to this artificial general intelligence moment. And if we don't, I think that's when the crash happens. The other race is, I would say it's a race between China and the United States. That's where I think it's kind of like the space race. So I think it's early days of this. I think we're going to see a ton of scammy, gross, stupid AI things, right? You're going to see like the Rabbit R1 and the Humane AI pin, and you're going to see services that are kind of shady appear. You're going to see Grok, right? That's another customer of NVIDIA. XAI is a customer of NVIDIA. Tesla's a customer of NVIDIA. So I think it's an AI race between America and China, and it's an AI race between Google, Microsoft, Amazon, Apple to a lesser extent, Tesla, and Elon Musk's X. And then obviously you have Anthropic, you have OpenAI, and stuff like that. But yeah, I just don't see NVIDIA doesn't have to do anything to be successful, dude. And the question from the chat is, what's the catalyst to this? It's already happened, man. Like, the catalyst was Wall Street is valuing AI companies higher than most other companies, right? So that made all these companies pivot to AI. And when you're pivoting to AI, or you're increasing your AI spend, you only have a couple of companies you can talk to, and NVIDIA is the largest supplier. So NVIDIA, I guess the next catalyst for NVIDIA is going to be the H200 shipping. Blackwell is what they call it, or whatever. It's a new chip framework. I think that NVIDIA, their go-to move for the next few years is going to be trying to make these chips more efficient, which is like their go-to strategy all the time, right? It's like build something huge, shrink it down, make it consume less energy. That's what they do. So maybe the H300 or the H400 will be some sort of, huge moment for the tech where you hit this level of energy consumption or you hit this level of cost where it becomes like super fast growth for these AI companies. Maybe they can add like 10,000 more parameters to whatever model they're training on. So I think that's going to be it. It's like, what can you do with AI is a factor of the hardware that you're using to train it, because that's a factor of how much time you're training it. So the faster you can train, the more parameters you can train with, the better your AI will get. And the hope is that somewhere down the road, they get to AGI. But that's where I'm like, I don't want to invest in the companies that are investing in AI. I want to invest in the company that's selling pickaxes during a gold rush, and that's NVIDIA. So my hot take is more of a qualification. I think NVIDIA can go to $450 a share if the AI bubble persists. And I'm seeing evidence that it'll persist at least through the first half of 2025. So it's hard for me to get super bearish on anything here. At least in that space. Does that make sense? No? Okay. Cool. Well, yeah. I don't know. Is there anything else? Any stocks I missed? When did we stop calling it machine learning? Or why? I don't know. Because I think AI intelligence is different. Machine learning, you could argue, is still pattern recognition. But the idea that a machine could learn, I guess, is similar. I don't know. Ask Tim Cook, Greg. I don't know. A good question, but I don't know. I think it's just more brand. It's more PR than it is actual reasoning. There's no like tech reason, I don't think. Maybe there's some nerd out there that'll actually me and tell me why. Hey, Lucci, you showed up right at the end of the show again, man. I am not going to a party after, but I just had to dress up as the best character in the Mario movie for Halloween. We got trick-or-treaters coming by my house, so I'm not going out. No, not going out tonight. It's a Thursday. I got to work tomorrow. But yeah, I'm just the best. I'm the best. I don't know if you saw the Mario movie, but Luigi's the best. He saves the day. But yeah, I don't know. Any other stocks you guys want me to look at before I get out of here? I mentioned ARM reports next week. I mentioned there's an election that might cause volatility. Just real quick, U.S. Steel stock is kind of back. They might be able to get acquired. I think the deal with Nippon Steel has been canceled, or at least blocked by the U.S. government. But there might be another suitor for U.S. Steel. But yeah, that stock was 27. It's back up at 39 now. Just something I pay attention to. But yeah, I guess I'll leave you guys with this chart of the volatility index. Yes, I'm Luigi. Luigi. Yes. So you have an inside week and up buy signal in the VIX. Pay attention to that. And inside month and up. This is information you could use tomorrow because November 1st is the first day of the month. That's how things work. Time. So you had inside month above 2342. We could get some more pain. And I want to just keep hammering this home. There tends to be volatility around U.S. elections, especially lately, because one of the parties refuses to accept results. And I think that we may see something similar like that this next week, where there are lawsuits being filed about election results that are going to delay the reporting of the results. Markets hate uncertainty, and the volatility index is basically how uncertainty is priced into the market. We shot up to 66 on the VIX during the August Japanese market crash. That was a very high, very panicked sell-off. We hit a high of 85.47 in the VIX at the height of the pandemic, or right as we were locking down America. So if a panic ensues, the VIX can really get going, and it can go real high from here. And that, I think, would create opportunities to buy stocks if the world isn't ending. If the world's ending, pro tip, if the world's ending, I don't think money matters anymore. So who cares what happens to your stocks? So that's going to do it. As always, I want people to manage their risk. So it's important to look at these risk ranges I gave you today to give yourself at least some idea of where things could go next week. But yeah, you don't have to put on any trades before the election. You can just sit in cash and react accordingly. Have a shopping list ready. Like if you are interested in buying Nvidia, maybe you don't want to buy it at 130 a share. Maybe you want to buy it for less than 100 or something. If a sell-off happens, that might create that opportunity. Or like in Nintendo reports next week on election day. So it's like, if you're interested in Nintendo, don't buy it ahead of the earnings. Wait, see what they have to say, and then buy it or sell it. So yeah, I think that'll do it for the show, though. Look, you gotta be a realist, man. If the world ends, I don't think money matters. But yeah, what matters are poop emoji pillows and posters of Bob Marley and comfy couches and handing out candy to people. So yeah, hope everyone had a great Halloween. Or you're out there trick-or-treating right now. If you're watching this live or if you're watching the VOD later, thanks for tuning in. And I will be back on November 29th with another episode of Game Trader Live. Thanks for watching.